This conference will now be recorded.
Hi, what's up, everyone? This is me, Ali, and I'm representing ABFX. Guys, once again, a very warm welcome to all of you in this particular webinar. I hope you had a very nice weekend and also a very happy new year to everyone. Guys, as promised, that we are offering 4 webinars a week now, and this particular webinar is especially designed for the professional level traders. For instance, we have designed our webinars in a way that, for example, if you are a newbie, if you're a beginner and you have no experience in the market and you are looking for a mentor to learn the basics of Forex trading, we are going to have sessions on the basic trading strategy, basic terminologies, as well as basic fundamentals and technical skills as well. And in addition to this, we have designed the webinars for professional traders. For example, if you are trading real time and you are looking for the trade opportunities in the market, and you want someone to ask your questions, you have ambiguities in the mind, and you want to clarify things, we are here for you. And in this particular webinar, I am going to help you out with all the trading activities that has been done throughout the previous week, as well as in this particular week. So this is why this particular webinar is called Forex week ahead, January 7th to 11th. So we are going to speak about key trade setups as well as the economic events this week. My name is Ali, and let's proceed towards the webinar. All right, guys, speaking about the webinar highlights. So first of all, we are going to take a look at the past activities of the market. We are going to begin our day with uh, discussing the trade opportunities of the previous week. Then we are going to take a look at how Fed fund rate, Fed fund interest rate and their monetary policy is impacting the US dollar. As you remember, during the previous month in December, Federal Reserve decided to hike the interest rate by 25 basis point, and that was the fourth time in 2018, which has impacted the market in a quite an aggressive manner. But the thing is that if you have attended our previous webinar, we knew that is coming and we were well prepared for it. So this was not surprising for us anymore. However, we are going to speak about this in this webinar. And then we are going to cover NFP, unemployment rate, and how this is impacting the market. Guys, this particular economic event is very, very important from trading point of view. And the impact of this particular economic event is not limited to the previous week, but also it also impacts the market in the coming weeks. For example, today the dollar sentiment is being determined by the NFP figure and unemployment rate. Now we are going to speak about it in a lot more detail in the upcoming slides. So let's take a look at what's going on with the gold. I will let you know what's going on with the gold, why this is bullish, although we have NFP, which was like extremely positive, but still gold is bullish. I will let you know what is the reason behind it. And speaking about the current week, this week we are going to speak about why current week is important from trading point of view. I will let you know the importance of the current week, and then we are going to speak about the start of the week sentiment. Today is Monday. Today is the first day of a new week, and this is very, very important for us to determine the market sentiment. And how we drive the market sentiment is based upon the past activities, right? So in past activities, we got NFP figure, we got unemployment rate, we got the Fed interest rate decision. So all of these are going to drive the market sentiment for today as well as for this week. So that is one of the reasons why we are covering the previous week economic events. In addition to this, in the current week, we do have the Bank of Canada rate decision, which is very, very important from trading point of view. Then we have US inflation rate. Then we have UK GDP figure. We are going to look at all of them one by one, and I'm going to tell you their forecast, what to expect from their economies, and lastly, we are going to take a look at the real-time trade opportunities. I have some trade setups for you guys. I will share the like technical setups. I will share with you the technical trading levels, and I will let you know where we can take entry and where we can exit from the market, as well as what is likely to be the trend of the market throughout this week. So that being said, guys, before I proceed towards our first slide, I would like to tell you that we are, yeah, like we always appreciate the questions and answer session from our members. So just feel free to share your queries in the chat box. You can find it on the right hand corner of your screen. Just drag down the chat and you can put your questions, and mostly we prefer to answer them by the end of the webinar to make sure that we are not like we are covering everything. However, if you feel that this is very important and you won't be able to understand things if you are not clear on this particular question, so just feel free to share with us the question. We will make sure that we answer it right away. So moving on towards the first slide. For all the members who are joining me for the very first time, guys, these particular webinars are designed for professional traders, and in this particular webinar, we are not going to talk about like any trading strategy. We are going to talk about the real-time activities of the market. So what you are going to learn in this particular webinar is the real-time fundamentals analysis. You're going to learn the technical analysis, the real-time technical analysis. We will be forecasting the future prices, and lastly, we are going to speak about the market sentiment. These days, market sentiment is one of the most important tool or way of predicting the market. So this is why, like most of the time, like I have heard the question that how do we perform sentiment analysis? Is there any proper way? No, I want to say no. There is no proper way of conducting sentiment analysis. But in this particular webinar, you will be able to learn how we are driving the market sentiment. You will be seeing that with the passage of time, like by the time we are speaking about the fundamentals, technicals, we are also driving our sentiment for the market. We will be driving the market sentiment. So that being said, let's move on towards the next slide. Fellows, in this webinar, what we try to cover is we try to cover Euro USD, we try to cover GBP USD, Australian Dollar USD, USD JPY, and USD Canadian Dollar, and lastly, we try to cover the precious metal gold, and sometimes we also speak about WTI crude oil prices. However, just feel free to share your query with us in the chat box, and if you have any position stuck somewhere and you want guidance upon it, and just feel free to write us in the chat box. You can write us in through email. You can join our Telegram channel and WhatsApp channel, where we are providing free trading signals for all of our clients. So in case you are not the member of our channels, I will share the link with you guys by the end of this session for sure. So speaking about the previous week's fundamentals, which starts with like 31st December to 4th of January. So during the last week, the only important economic event which is worth looking at is the economic figures from Canadian economy and labor market figures from US economy. Last week was like half of the market was closed, half of the days were closed because of the New Year Eve, because of the New Year holiday, and also because investors and traders who were out from like from Christmas, they were supposed to come back after New Year holidays. So there was not the market was not so much volatile during the previous week. However, the Thursday and Friday were the days of volatility. So why we had volatility in the market on Friday? The things begin with the Canadian markets. So Canadian dollar was getting a bit stronger against the US dollar. One of the reasons was their unemployment change and their unemployment rate. Guys, looking at their unemployment rate and their unemployment change, both of the economic figures performed exceptionally. Here in the screen, you will be able to see that here this figure is the one which is actually released, the figure for this month. This is the forecast from the economists, and this was the previous figure. Okay, here's the thing. Fellows, forecasts do impact the market valuation very strongly. For example, before the release of news, everyone was expecting unemployment rate to drop down from 5.6% to 5.7%. This is a negative figure actually. All right, so we do have another member. All right, guys, just by the time you are joining me, just confirm me that if you are able to hear me clearly. In case of any issue, just feel free to write me in the chat box. So moving on towards our economic calendar again. So we were speaking about what happened in the last week. During the previous week, we had the Friday was one of the important trading day because of the Canadian economic events as well as because of the US economic events. So starting with the Canadian economic events, Canadian dollar was getting stronger for multiple reasons. There was no single reason behind it, but one of the reasons behind a stronger Canadian dollar was their labor market figures. Here's the thing. Economists were expecting their labor market to drop down. For example, employment change was expected to be like 6.8K. In case you are wondering what is employment change, it means that during the previous month, how many job opportunities has been added by the Canadian government, by the Canadian economy in their economy. So which means that so here we go. So which means that the only economists were expecting like 6.8K job opportunities, whereas the actual figure came out as 9.3K, right? Which is better than expected, right? On the other hand, unemployment rate was expected to be like 5.7%, which was worse than the previous figure, which is 5.6%. So here's the thing, guys. Although the unemployment rate was 5.6%, which was like exactly in line with the previous release, there was no change. But this is how it impacts the market. Let's say if I tell you guys that we are not likely to have a good economic event today, I'm giving you a negative news myself. I'm spreading sort of a negative news. I'm not surprising you with the positive news. I'm making you disappoint, and suddenly I comes up with a very good news, right? So this is exactly what Canadian economy did. The economists were expecting their unemployment rate to rise from 5.6% to 5.7%. Everyone was expecting a bad news, but actually their economic figure came out as 5.6%, which is way higher than their forecast, way lower than their forecast, but in a sense that the lower unemployment rate is always better than is always considered better. Okay, these two figures were one of the reasons why Canadian dollar was getting stronger. Another reason behind a stronger Canadian dollar was the crude oil prices. It's been like 1 week now or 2 week probably. Crude oil prices has dropped down from $80 per barrel to near to $40 per barrel, right? So the $40 per barrel means, guys, the Canadian economy like exports like 70% of their crude oil to USA. So which means that if they are exporting WTI crude oil to USA, they are getting dollars in return, right? They are getting dollars in return. But once, all right, Chandra, you are not able to hear me. Let me check what's going on. First of all, welcome to the webinar, Chandra, and thanks for joining us today. Chandra, I would request you to please check your headphones because here I can see that my mic is working on the software. Software shows that mic is working. So probably please check your headphones. In case you are not able to hear me, please try to join me again. All right. So we were speaking about the second reason behind why Canadian dollar was getting stronger this week. So WTI crude oil prices were falling down from $80 per barrel to $40 per barrel, right? So as soon as the prices are falling down, this means that being a exporter country, I was getting like Canadian economy was getting less dollars against per barrel. Earlier, their revenue was like $80, but then when crude oil prices fell down to 40, their revenue fell down to 40, which means that earlier they were earning $40 for there's a $40 gap in between both prices, which means that their revenue is falling down. Ultimately, when their revenue is falling down, their corporate sector will be performing bad. They will be like laying off their labor sector. They will be doing downsizing. There will be less manufacturing in the economy. There will be, like, for example, if there is a downsizing in the economy, the corporate sector is not working properly, so people will be having less income, less profit. They will be spending less, and ultimately they will be like the overall economy will be falling down, which is why their GDP was bad, which is why their retail sales were bad lately. So right now, here's a reversal. Crude oil prices has started rising upward. Now crude oil prices have reached to $48 per barrel, which means that this is a nice pullback, and this is actually underpinning USD Canadian dollar this week. So moving towards the USD fundamentals from US economy. So here we go. We had like average hourly earnings, we had non-farm employment change, and we have unemployment rate. Fellows, as I said that we are going to determine the market sentiment as well. Before I proceed, Chandra, can you please confirm, are you able to hear me now or still the same? You can confirm me in the chat box. Let me type a message maybe. All right, so moving on, we were speaking about the unemployment rate, the labor market figures from the United States. So here's the thing. Perfect. All right, so we were speaking about the unemployment rate and the non-farm employment change and average hourly earnings. So here's the thing, guys. Out of these three economic events, all of them are extremely important from trading point of view. They do drive a massive volatility in the market, and this is one of the reasons why most of the people, most of the traders do trade NFP figure every first Friday of every new month. So here's the thing. For example, all of these figures are coming at the same time on the same day. So how you are supposed to trade them? If they comes like one is positive, one is negative, so this is quite confusing, right? So if the average hourly earnings are positive, the non-farm employment change is positive, the unemployment rate is negative. Chandra, my question to you is, what do you think? How dollar is likely to behave? Let's say you can give me right answer, you can give me wrong answer, but what I want is your participation. You can type your question, you can type your answer in the chat box. You got 30 seconds. Positive or negative? Just say positive or negative. If we have positive NFP, negative, wow. All right. So yeah, I must say that here's how market behaves actually. If we have the average hourly earnings are positive, the average the non-farm employment change is positive, the unemployment rate is negative, the answer to the question is negative. That dollar is likely to behave in a negative way, like we may see a sell-off in the market. So yeah, the answer is right, but there's a twist here. So the twist is, because all of these economic events are extremely important and they do drive the market volatility in the market. So here's how market behaves. The NFP is being traded in the short time frame. Like this is given, the initial response that we get in the market is based upon NFP figure. If NFP is positive, you will see a sudden spike in the US dollar, you will see a sudden dip in the gold, you will see like a dollar getting stronger. But on the other hand, if unemployment rate is negative, you will see that after getting stronger, after giving us a spike in the market, we will see a reversal in US dollar. And that, here comes your answer. Yep, we do have a negative impact on the US dollar because we have negative and unemployment rate right now. So that being said, as we said in the beginning of the webinar, we will be driving the sentiment for the this particular week. So we because we don't have any major economic event today, except ISM non-manufacturing PMI figure, which is not very high impacted economic event. So we have to drive the market sentiment, which means that we have to drive, like, it's the start of the day. It's not only the start of the US session, it also start of the of a new week. So driving the market sentiment means that we will be looking at the previous fundamentals which are out. So we have our eyes on unemployment rate, which is negative, which impacts the US dollar for a longer period of time than NFP. So this was negative. So today we can expect US dollar to stay negative. We can expect US dollar to show us bearish trends. Guys, when we speak about bearish trend in US dollar, this means that Euro USD will be going higher, Euro GBP GBP USD will be going higher, USD JPY will be falling down, gold will be trading with the bullish sentiment. So that is exactly how market has traded today, right? So this is how market is going to trade every time you have NFP. One is positive, one is negative. This is how you can expect market to behave. So which means that average hourly earnings, one is positive. Let's say in this case, let's say now we say that this is negative and this one was positive. So it means that the initial response of the market was supposed to be a sudden dip in the US dollar, but onward after Friday, like maybe the ending hours of Friday or maybe the starting hours of Monday, because Asian sessions joins the market on Monday morning, right? We got Chinese investors, we got Japanese, Vietnam, we got Australian investors, New Zealand, everyone joins like on the Monday morning. So here's the deal. They will try to price in the unemployment rate. If this is positive, they will start trading the dollar with the bullish sentiment. Otherwise, they will start trading the dollar with the bearish sentiment. And if we are able to predict the movement of US dollar, we will be able to predict the movement of Euro USD, all the currency pairs, whether this is direct, whether this is indirect. Along with this, we will also be able to predict the movement of commodities. In commodities, we got gold, silver, WTI crude oil, platinum, and uh, many other commodities. But the thing is that these are the most traded ones. So gold will be bullish, right now because negative unemployment rate. WTI should be bullish right now because unemployment rate is negative. So that is exactly how market is trading today. So what we are going to do right now is enough about the past week. We are going to look at the economic events which are likely to be there in this week. We are going to go through them one by one very quickly. So here's the first economic event. Uh, so that is ISM non-manufacturing PMI. Just ignore the Tuesday. This is not Tuesday. This is Monday, right? So here's the deal. USD no, ISM non-manufacturing PMI is here, and the figure is as you can see, it's a non-manufacturing. It's a non-manufacturing means that this is not a manufacturing figure. We had a manufacturing figure released in the previous week. Right now this is non-manufacturing, which means that this is services sector economic event. Guys, services sector economic event means that if we have a positive indicator release, this will drive the bullish sentiment for US dollar. On the other hand, if there's a negative news, we will have a bearish sentiment for the US dollar. But there's a slight twist in the interpretation of this particular economic event. Here's the thing. Figure is likely to be released at 15 GMT time. So with a forecast of like 59.6 versus 60.67, this is a forecast. Economists were expecting, sorry, this is a previous one. The economists were expecting 59.6 points this in the previous month, while the figure was 60.7 before that. So it means that the data is negative. It should impact the US dollar in a negative way. But here's a twist here. Overall, whenever just remember this point. Whenever we are dealing with a PMI figure, which is called like producer manufacturing index, so whenever this one is we have a threshold for this particular economic event, whether this is manufacturing PMI, whether this is services PMI. When I speak about services PMI, we can also call it as non-manufacturing PMI, because in services we are not speaking about a manufacturing thing, right? So there is a threshold, there is a benchmark which is 50. Okay, if the economic event is above 50, this means that the economy is in its way of expansion. It is expanding. It is growing. This is good for country. This is good for their currency. This is also good for their stock markets. So this particular figure is way higher than 50, which means that the economy, US economy, is performing remarkably, right? We don't have any comparison for it. If I compare it with the Eurozone, if I compare it with the Chinese markets or any other market, the figure is highest, right? So this is one of the reasons why we have a strongest bullish trend in the US dollar. It's been like 3-4 months right now. So that is also one of the reasons why Federal Reserve is consistently going for the contractionary monetary policy. They are hiking their interest rate. They are making US dollar more and more stronger, which they actually don't want to do. But thing is, their economy demands to hike the interest rate. This is a long debate. We will discuss about it sometime in the future. So, I hope you got the point. So if the figure is above 50, this is once again is extremely nice figure for US dollar. But let's suppose if today ISM manufacturing PMI releases as 55, as compared to 60, this is going to shock the market. This is going to make a sell-off in the US dollar, because although, like, let's suppose, let me give you an example of a student. Let's suppose if there is a very brilliant student in a class and who is taking who is scoring like 80 plus in every exam. It's been like 9 tests right now, and in the ninth test he scored like 80 plus. But in the 10th test, he scored like 60 or 65, right? This is although this is a passing, this is way above the passing marks, which is like, let's say, 50%, but still this is going to surprise you. This is going to shake your sentiment about that particular student. You will be thinking that maybe this particular student is losing interest in the studies, and maybe he will not be able to get a good position in the in the class, or maybe he will not be able to pass the subjects, or maybe your sentiment is shaky right now as compared to before. So same case applies here. If the ISM non-manufacturing PMI comes out as 55, this is going to shake the sentiment of investors, and we will see a massive sell-off in the dollar. On the other hand, if the figure remains at like 59 or 50 or 60 or maybe 61, definitely this is a bullish news for US dollar. However, in case of 65, which is way higher than 60, we will see a massive buying in US dollar, not only for today or maybe for tomorrow. So there is going to be a change in the sentiment of the investors. So enough said about US dollar. Let's move on towards the next economic event, which is the trade balance figure from Canadian economy. Fellas, let me tell you one interesting point about Canadian economy. The Canadian economy is recognized as a sourceful country. They are like a resource-based country, and which essentially applies that most of the economic growth is experienced early on came and the utilization of their export products, which means that they are using natural resources, they are exporting it, they are making revenue, and they are making their economy grow. They are hiring people, which is why their GDP is good, which is why their inflation rate is good, which is why their unemployment rate is good, and this is the sole reason why people are investing in the Canadian dollar, right? So these are the core factors which everyone looks at before investing in any economy. So here's our point right now. We are speaking about the trade balance figure. We said Canada is resource-based economy. They depends upon their exports, right? So the trade balance is exports minus imports. All right, so exports minus imports. It means that if the exports are higher, there is going to be a positive figure. But on the other hand, if the exports are less, there is going to be a negative figure. So if you are, here's a question, Chandra, for you. Uh, if you are an export-oriented country and you are making less exports than your imports, this is good for your country or bad for your country? Like if you are we say that Canada is an export oriented country, they earn from their exports, and in case they are making less exports and they are purchasing more, whether this is good for their country or bad for their country. This is just it is just like if I am like spending more than my earnings, right? Let's suppose if I'm earning like let's say if my earning is 10 and I'm spending uh, 12, and I am it means that I am spending more than I am earning. Same is the case here. They are exporting if they are exporting less while their imports are higher, which means that they are buying, their buys are high, and their sellings are lower. So which means that their revenue is low and their expenses are higher. So it means that you are not saving anything, which means that your economy, you are not getting revenue to spend it in your economy. You may not be expanding in this way. So this is negative for Canadian economy. So that being said, their trade balance forecast is negative. The economists are expecting minus 1.9 billion of deficit versus, fellas, when we speak about trade balance, uh, either we have a trade surplus, either we have a trade deficit. Trade deficit means that you are exporting less than your imports, while trade surplus means that you are exporting more than your imports, right? So here we have a deficit of minus 1.9 billion, which can make Canadian dollar weaker. Actually, there is a reason behind it. We spoke about the crude oil prices, the drop in crude oil prices with 50%, like there's a 50% drop from 80 to 40, which means that when we speak about the trade balance and deficit thing, we are not speaking about the percentage. We are speaking about a figure, like full-fledged figure, million, billion, which means that there's a 40% drop in the value, which is ultimately impacting their, although let's suppose if they are exporting same quantity of crude oil, but the thing is that they are getting less revenue than before. So that can be the reason behind trade balance figure. So my point here is, even if we have a negative trade balance or a trade deficit, we may not see any major or long-term influence of this figure on the Canadian dollar, right? So I hope that makes sense. So moving on to the next slide. Guys, in the meantime, if you have any questions, you can also share it with me in the chat box and I will be answering them right away. So here we go. So we have the next thing we have on the docket is FOMC meeting minutes. What actually happened? FOMC meeting minutes are actually these are the key points, or it's a summary of whatever happened in their policy meeting in December, right? If for the, let's suppose if the meeting minutes are coming out in February, this will be all about their meeting in January, right? That will be a written note on, like, okay, we spoke about GDP, we spoke about inflation, and we spoke about interest rate. So that is going to be a list of contents that were discussed in the previous meeting. So likewise, this particular meeting, which is in January 2019, is all about their meeting, which was conducted back in December 2018. My handwriting is not so good, uh, so just bear with me. So what I was saying is, these minutes are about their meeting in December, right? So what they actually did is, that was dovish in nature. Okay, now there can be a dovish monetary policy, or there can be a hawkish monetary policy. Dovish means that whenever they are trying to weaken their currency, whenever they are speaking about increasing the supply of money, or whenever they are like reducing the worth of or exchange rate of their currency against other currencies. Here's a reason behind it. If the dollar is getting stronger, this means that I often give the example of iPhone because this is common for everyone. So here's the deal. iPhone was costing $1,000, but let's say I have my currency is PKR. Let's say this was like 100,000, right? So the iPhone was costing me 100,000. So here's the thing. If the exchange rate between PKR and USD is rising and it has increased to somewhere, like I'm not going to say this is like 1 or 10 or something. Just hypothetically, the prices of iPhone are same, but the thing is that the exchange rate has increased, which means that right now I have to spend 100 and 140K to buy same iPhone, which is at the point, at that point, which is still at $1,000. But the thing is, due to exchange rate reasons, I'm not able to purchase the iPhone. Likewise, the things, the USA products will, the products from the USA will be getting expensive for the outer world, and ultimately people will reduce their demand, and ultimately USA and their corporate sector will suffer. So sometimes what most of the economists do when they feel that their currency is like getting very stronger, and that may cause a drop in their exports, they try to play with words. Mostly they gave words like, we have slacks in economy, or maybe we will wait for inflation to rise before hiking the interest rate. So this time what they did is they used the term, um, they may hike the interest rate 2 times instead of 3 times. Like throughout 2018 they were speaking about 4 rate hikes in 2018 and 3 rate hikes in 2019. So now they are hurting the sentiment of investors. Whoever, like the swing traders, means that Swing traders are the one who like purchase, invest in something, and they stay in the market for a couple of months or maybe up to a year, right? So they are long-term traders. So this is something which is hurting the sentiment of swing traders, but also hurting the sentiment of intraday traders, which means that people are less likely to invest in the US dollar, and that is exactly what is making US dollar weaker, and this is what which is making gold bullish. So um, they also said that Fed will continue contracting the balance sheet, which means that they are expected to reduce the bond buying program, which is again dovish in hawkish in nature, which means that when they are not purchasing the corporate bonds, they are not injecting the money supply in the economy. So ultimately, this is like summing up. This is actually weaker for currency, right? So these particular meeting minutes are likely to like shed some light uh, on the expectations from the Federal Reserve. I'm expecting that we are not going to see anything new from these minutes, but still, since these are coming out, we should be there. We should watch them, and we should be able to like find out clues about what they're going to do in the coming months. All right, guys. Moving on towards Bank of Canada monetary policy meeting. The Bank of Canada is releasing its interest rate, and just like every other bank, not every other bank actually, just like the Federal Reserve, which is the central bank of United States, Bank of Canada is expected to hike the interest rate. Now, here's the thing, guys. Every other bank in the market is not hiking the interest rate. We do have Federal Reserve, which is hiking the interest rate. Uh, the UK Bank of England is not hiking the interest rate anymore. Like they hiked the interest rate from 0.50 to 0.75, but this is like it's been like 3 or 4 months now. Now it's a past event, right? So ECB is not hiking the interest rate. Bank of Japan is not hiking the interest rate. But here's the thing. Bank of Canada is in the line. They are expected to hike the interest rate from 1.75% to 2%. Okay, now why they are hiking the interest rate? There's a very we can do a very long debate on it, but let me make long story start. They have like NAFTA. NAFTA means that they have an agreement between there was an agreement between Mexico, Canadian economy, and USA. They were like free borders. They were able to import and export with each another without tariff thing. So here's the thing: if the dollar is getting stronger, this is hurting the exports of Canadian economy, the imports of Canadian economy as well. If like let's suppose if the Canadian economy was purchasing something from USA, now dollar is getting stronger. It means that Canada is at the same level, but dollar is getting stronger. People will be the businesses will be getting impacted. So although their economy was suffering because of the WTI crude oil prices as well as due to the trade war sentiment, still economists are expecting them to hike the interest rate from 1.75% to 2%, right? So this is one of the reasons why we can expect Canadian dollar to stay stronger against the other currencies. So my idea is I will be looking for the bullish positions in the Canadian dollar until and unless the rate is out. So here's the thing, guys. If the rate is stronger, if that is 2%, we may see Canadian dollar to spike up, and then it will be normal, right? Because we know that on Wednesday there is going to be a rate hike. Everyone knows. Everyone is investing in Canadian dollar because everyone know that there is going to be a rate hike, right? So it means that when everyone knows something and that is happening, this is called like buying the rumors and selling the fact. So as soon as we have we actually see a rate hike, we may see a reversal in the market. So that is what we can expect: either a sudden spike in the market and then a sudden fall in the market, right? But on the other hand, let's suppose if Bank of Canada decides not to hike the interest rate, this is going to be an interesting scenario. This is going to be something which can give us a trading opportunity, because no one is expecting them to keep the interest rate steady at 1.75%. If they do, there's going to be a very sharp sell-off in the Canadian dollar. So here's what I will be doing is I will be closing my eyes and I will be selling Canadian dollar. Guys, don't make a mistake. Like if I say I will be selling Canadian dollar, it does not mean that I will be selling USD Canada, because the if Canadian dollar is getting weaker, I hope that you will not confuse it. The prices of USD Canadian dollar will be going higher, while on the other hand, if the interest rate hikes, we will see this pair going downward, right? So moving on towards the next slide. All right, so yeah, we have ECB meeting minutes. Just like the FOMC meeting minutes, we do have meeting minutes from European Central Bank, and the thing is that the we may not see anything hawkish in nature. Probability is ECB will keep its tone dovish, which means that it will keep its tone negative for eurozone and for the single currency euro, and it is because their economy is suffering a lot. If you are following news regularly, if you are following us regularly, you must be aware that the market is like the reason why euro was weaker a few days back is because of the debt crisis in Italy, because of the problems, every problem in Spain, Italy, and Germany. So if we look at their GDP figure, we can say that they are suffering financial crisis. And if you look at their this particular chart, you can see that the GDP of like the debt rate of Italy is 131.8%, and that is insane, guys. That is crazy. Mostly, the benchmark is economists try that their debt should not be more than 50%, which is very peak of their GDP. GDP means that whatever they are making, right? Whatever they are producing, their debt should not be more than what they are earning, right? You should not borrow more than your income. Like we can take it in this way. I will try to. I always prefer not to make any expense which is higher than my income, or I will not try to borrow more than my income if I believe that I am not producing more. My like let's suppose I'm running a corporation and my manufacturing is not enough, I will not be borrowing more than it. But the problem is that is a full-fledged economy, and this full-fledged economy has come under a massive debt. Their debt ratio is 131.8% of GDP, which means that this is not only covering their GDP, that is in excess to their GDP, which is insane. So this thing is due to this thing. Secondly, we have the government debt ratio of France, which is 97% of GDP. It means that if you are producing the products worth $100, your loan is like your debts are 97. You are saving yourself $3, and this is again no, this is not going to do any better for your economy, right? So uh, which means that the central bank, which is responsible for the uh, for making economies better, will not hike the interest rate in this particular situation. Because guys, what is interest rate? Let me give you a very quick idea. Interest rate is, if I'm borrowing, let's suppose if I borrow 100,000 from bank, and bank says that I will be charging you 10% on your loan, which means that I have to pay against 100 against 1,000, I have to pay 100, right? But here's the thing: if the bank hikes the interest rate, if bank hikes the interest rate, I will have to pay, like let's say they hike the interest rate from 10% to 15%. It means that I have to pay $150 instead of $100, which is making my borrowing, like the borrowing cost is rising, and this is going to be a worst position for me, right? So similarly, if their debts are like 131% debts, which is in excess of their GDP, so definitely ECB will try not to hike interest rate, because this is called a father of all banks, this is called a father of nation, and they are actually responsible for taking care of all the financial activities in the market. If they hike the interest rate, there is going to be a trouble. Corporate sector will not be able to borrow loans. The existing loans will get expensive, and the revenue and the sales structure of every economy will fall down. We may see a collapse in the market. So if being a very tiny analyst, if I can understand these things, so the central banks do understand this thing. So probability is very high that they are not going to hike the interest rate in near future. Maybe in the mid 2019, or maybe by the end of 2019, they will start speaking about hiking the interest rate. I'm not saying that they are going to hike the interest rate in the mid 2019. What I'm saying is they will start speaking about hiking the interest rate, and that is enough to give support to European currencies. Guys, quickly moving on towards the technical setups. Anyways, we do have GDP figure from UK. I'm not going to discuss it right now because we are over time right now, and we are going to meet again a day after tomorrow, so we can cover it again. So here's the thing: GBP USD is in front of us. The this is a choppy trading, right? If you look at there, we have a choppy trading session. Market falls down, goes higher. Let me change the color of my marker because this is not actually visible. Probably black one should work. Yep. So guys, the support level is 1.2540, and the resistance is 1.2809. So this is a weekly analysis. What I will be looking to do is, when market falls down to this level, I will be looking to take a buy position, while when market tests this particular level, 1.2809, or let's say 1.2810, I will be looking forward to capture a sell position, where the stop loss needs to be somewhere above 1.2830 or 40, because you should, when you are taking a long-term position, your stop loss needs to be at an appropriate place. So somewhere around 1.2835 or 40, or if you are like more risk tolerant person, you can go for 50 pips stop loss, so 1.2815, and take profit is likely to be 1.2765, 1.2725. That's it. I will not be holding my position for so long, because we never know how the economic events from UK are going to impact the market. So here's the thing, here's the deal. Um, I will prefer to stay in sell below this level. I will prefer to stay bullish above this level. But as soon as market comes out of this particular range, I will be looking forward to enter a buy position. Below this, I will be looking forward to enter a sell position. Right. So moving on towards the next one. Here we go. So guys, this is a chart of USD Japanese yen, and looking at the this particular chart, you can see that there was a descending triangle pattern. The descending triangle patterns are meant to break out in the on the lower side. So here's the thing, this particular support area is now likely to work as a resistance. Right now I'm not confident about what to do, because this is not necessary to have a trade idea every time, although there is a trade opportunity every time in the market. But some trade opportunities are high probability, some trade opportunities are like weak probability. So I always look for the high probability trade opportunities. If there is no trade, there is no trade for me. If there is a trade, I will wait for it. I will wait for it, and I will wait for it, and I will wait and enter in the market at an appropriate time. So we should never enter in the market like we should not trade just for the sake of trading, right? So we should be trading for the sake of taking profits. So here's the thing, the initial support is likely to be 108.500, whereas the violation of this resistance level is likely to push the market towards 110.200. Whereas below this, like this is sort of a bullish trend line right now, so below this market can continue to go towards 106.500. So this is what we can expect from the market. However, guys, this is a pretty nice selling level. If I get market somewhere like here, I would definitely try my chance to take a sell position. Right, moving on towards next one. All right, I hope that it don't crash. And yep, I guess my slides crashed. Let me open it again. Just a second. Here we go, guys. So now we are going to speak about Euro USD. So we already spoke about USD JPY. We spoke about GBP USD. Now, lastly, we are going to speak about Euro USD. So here's the thing, guys. There's a bullish breakout in the market. 1.1415 was a pretty strong level today, and that has already been violated. Secondly, we have 20 pairs and 100 pairs moving average, which is already giving us a bullish crossover. This bullish crossover is suggesting that like as far as market is above this particular support level, which is 1.1415, we may see market going forward towards 1.1480. So that is exactly what we can expect from the market right now. And by the end of the day, if market manages to stay below 1.1480, I will be looking forward to take a sell position here. Right. On the other hand, below 1.1415, we can expect market to go after 1.1360. Guys, like mostly when I'm speaking about these technical levels, you can have your notes with you, and you can there are two things normally which I suggest to do. Either you can put them down on your notes and you can plot them on your MT4 screens, or you can, like, at the same time you can plot it on your screens. By the way, these webinars will also be available on the YouTube. So I would like to conclude this session here. That here is our in case you are joining us for the very first time, this is the link for our WhatsApp groups and our Telegram groups. What I can do is I can share the group links with you in the chat box, because I know this is going to be hard for you to note it down. Let me make it easy for you. Here we go. And guys, before we end this session, I would like to have your feedback on today's session. Was it interesting? Was it informative for you? Is there any feedback? Whatever you want to say, you can put that in the chat box, because we always try to have a conversation, and we always try to communicate in a way that you understand everything. Perfect. Okay, I hope that it is copied now. Yep, this is. All right, guys. Thank you so much for being here with me in today's webinar, and I hope to see you again in the next webinar. Until then, take care of yourself, and don't forget to subscribe to ABFX. You can join us on these channels. You should join us. Uh, you should open an account with ABFX definitely, because we will be providing free trading signals in these groups, and also you will be learning a lot. Secondly, guys, just feel free to join the webinars, and if you ever have any questions regarding the markets, you can share with us in the chat box, and we will be trying our best to accommodate you as per your request. Yes, Chandra, please go for it. Guys, we have a question here, and let's see what is it. Yep. So the 1 month boot camp is basically at ABFX. We have decided to give an exciting experience to our clients. What we are doing is we are giving them, like, for example, if someone is new in the market, we have designed a boot camp, which means that we will be teaching trading strategies. We will be teaching the basic terminologies, like starting from the very basic and going upward to the major concepts of the market. So it means that if you have zero experience in the market, you should join our bootcamp. This is a part of a bootcamp where this particular webinar was designed for the professionals, because we are taking care of the beginners as well as the professional traders. So after today's webinar, let's say if you were not able to understand things, I will suggest you to join our next webinar. You will be able to find ads on the Facebook as well as on our Instagram channels, and you can simply join the Telegram as well as the WhatsApp channels, because we consistently update about our next webinars. So in the upcoming webinars, we are focusing on newbies. If you have zero experience in the market, this is going to be extremely beneficial for you. So just I normally suggest to join uh, the like basic ones as well as the professional ones. Like, let's suppose if you are not able to understand things in the professional ones, but still this is important, because we apply things, whatever we teach you in the beginner session, we apply it in the professional sessions. All right, yes, sure. Chandra, if you can share your email address or your contact number, I will ask our account management team to help you out with the account opening process. You can share your details here, or maybe you can join our Telegram channel and you can share details there as well. Yes, we do have demo account, and you can try our demo if you want to experience how things are going. And the interesting thing is, as soon as you become our real member, we shift you towards a professional, like, premium signals group, where you find daily analysis as well as daily trading signals just for free. So in the market, definitely you have to pay cost for it, but for our clients, we do have it free. So just feel free to open the demo account, and then you will be able to move to real accounts as well. Yes, we do have classroom trainings, but as per your region, our account manager team will be able to assist you further on it. So what I can do is, you can share your email address or your phone number here, and I will convey it with the help of our account management team. All right, so guys, I believe that's pretty much it for now. Thank you so much. I'm taking it a note, and I will ask my team to contact you as soon as possible. And thank you so much, guys, for being here with me today. And I hope you like this session, and I really appreciate your presence. And I hope to see you again in the next session. Until then, take care of yourself and have a very good day. Bye bye.